to the US dollar. It's weakened. Of course, much of that has to do with the coronavirus gripping the global economic fraternity at the moment. But then again, we do not have a good domestic story to tell at the moment to make that currency move elsewhere. Now, I'm going to bring in Daniel Silke. He's a commentator on the political economy here. Daniel, you're going to be with us for now and much later as well. This afternoon, when the finance minister takes the stand, which Tito Mboweni do you think we're going to see? I mean, there's the one that will deliver the budget speech. There's the other Tito Mboweni who tweets early parts of the morning, exposing frustration that he has with his ruling party itself in not so many ways, depending on which way you look at it, calling for referendums. Would we see a little bit of both this afternoon, you think?
Yeah, I think we're going to see a little bit of both. We've seen Mr. Mboweni before in October of last year at the medium-term budget statement. There he effectively read the riot act to his own political party about the necessity for change, policy change, reviewing the way we've done business in the past. So he's quite articulate, he's quite pointed and can be with his own party. He doesn't need to convince the business community in South Africa. He doesn't need to convince opposition groups in South Africa. He needs to ultimately convince his own political party that business cannot be accomplished in the way it has been accomplished. The ANC. We'll see a little bit of both. I think that he will make some more startling statements, which I think will gain a substantial degree of attention in terms of reading the Riot Act. But whether he can take this beyond just rhetoric to actual implementation of some dramatic policy shifts, I would say is unlikely at this stage.
Yeah, because that's my next question. I mean, when you look at a budget like this, sure, you'll get the spending cut here and there on catering, on cars that are being purchased, but it's that dramatic announcement. It's the dramatic announcement that will reflect a policy shift or change that might be amenable to investors and ultimately affect the conditions of the economy to the person down the ground. Do you think a dramatic announcement is expected today?
Look, I don't see a dramatic announcement, but the minister has some serious choices to make, and the biggest issue really is on state expenditure. How do you trim state expenditure? You reduce headcount, or you work towards lower salary increases in the 2-3 year frameworks from now compared to when we had the last medium-term budget in October. So the minister could, I suppose, decide this is the time that he could take the battle to the trade unions within his own political party and put his foot down when it comes to salary increases going forward. That would be a positive signal for the marketplace. It would probably be a positive signal to the rating agencies as well, but it wouldn't be a positive signal within the somewhat volatile confines of his own political party. And he will have to make that call, just how far he's prepared to go when it comes to those internal political dynamics within the ANC alliance.
Yeah, because that pretty much reflects that political economic battle that we've seen for the past few months, if not years, on deliveries and some of the structural changes that we want. It's a political battle more than anything else, isn't it?
Look, ultimately it is a political battle because to take things forward he needs buy-in from his own political party, and that buy-in has to come through policy changes and shifts through successive ANC conferences and congresses. I mean, the ANC are still effectively implementing resolutions from the Jacob Zuma years within the ANC. The idea of a state bank, the idea of a sovereign wealth fund are largely Mr. Mboweni or President Ramaphosa acting on the dictates of policy resolutions at ANC conferences. So it's a fairly long haul to have to work through substantial change within the ANC, and then it can be announced through, of course, big addresses like today. But we're not there yet, and I think for the moment, therefore, we'll have tweaking at the edges. We won't have that substantive reboot of South Africa that perhaps many would like.
Time and time again, whenever we have the February budget, we speak about this Laffer curve, this curve that tells us whether or not, if you tax too much, you get this apathy setting in, and you simply raise taxes to such an extent that the public decides that we're not going to pay too much taxes now, and you start getting a lesser revenue collection. Have we reached that stage already, Daniel?
Well, I think if you look at the revenue projections for this year, and one of the things I'll be watching very closely is to see what exactly are the revenue projections for both personal income tax and especially for VAT as well. I expect us to be well short of the projected revenue collections. And I think that goes a long way to showing that raising taxes does not necessarily mean you are going to get more and you're going to gather more into your coffers. In fact, reducing taxes may well be much more of a spur to business, a much better feel-good factor, putting money back in the pockets of citizens rather than taxing them even more. And I think that's something, again, that the minister will have to weigh up. How much more can the average South African take, and to what degree will increases in taxes simply mean that they will perhaps find ways and means not to pay those taxes and become more disgruntled, more frustrated, and possibly even embark upon some low-scale tax revolt, as some have spoken about?
Look, I think the Finance Minister Tito Mbowene's competency, I think it's beyond doubt that he is one of the best finance ministers we had here. But then the credibility issue would come in here on whether or not certain announcements, certain pronouncements are made. What would secure his credibility if announced today?
Well, I think he needs to really show government is serious about this issue of cutting expenses and lowering debt levels that are now skyrocketing within South Africa. These are the very two big structural issues that rating agencies and most observers have called for. And it's not just external agencies. Yeah. I think most within South Africa argue that will begin to set us on a slightly better path of financial and fiscal management. So, I want to see a meaningful cutback in state expenditure, as difficult as it is, real rationalization of state departments for that matter. It was rather weakly done by President Ramaphosa a year or two back. I want to see headcounts drop and a commitment to that. And I think the understanding that salary increases have to be perhaps below the rate of inflation, even marginally, I think that would signal a substantial change for government. But of course that's austerity measures, and the minister is certainly he's not going to want to go down as a minister who presents an austerity budget today for political reasons.
Yeah, we can also see the unions pretty edgy about that. Daniel, Silke will be with me until after the budget speech is delivered for more commentary. But there you go, Julius. I mean, some figures that you'll be watching for. Is this growth rate going to be a dismal one we expected in terms of the forecast? What's that budget deficit gap going to look like? And are we heading towards this 70% debt to GDP ratio in the next 2 or 3 years? We'll know once this budget speech is delivered. Now it's shortly under an hour before the finance minister takes to the podium, and we'll be watching very, very closely to this.
Those are crucial figures that you point to there, Devin Murugan, because I mean, when you talk, for